Good afternoon, good morning, good evening, everyone. My name is Paul Young. I'm going to walk you through cash flow management and cash forecasting. Here's my agenda. I'll look at the summary. I'll talk a bit about cash flow schedules, kind of how you prepare them, kind of who uses them, and how the importance of them. I'll talk about just how you start doing cash forecasting. I'll talk a bit about free cash flow, and I'll talk about best practices. Here's a brief bio about myself. I held many different positions since 1990, since I entered the accounting finance world, but I balanced things out between reporting in accounting and Office of Finance down to building solutions that support the Office of Finance and Accounting. I've also spent time with the sales cycle on the FPM side to help close deals, worked on renewals, and on account expansions as well. And as you can see, there's some key accomplishments here, which I've done 300 data AI deployments across geography and industry for the past 10 years. I also am a big proponent in building relationships with clients and business partners to drive the best business outcomes. If we talk about cash flow in a nutshell, anybody in accounting finance knows probably has prepared some shape or form cash flow. And in this particular case, we're talking about inflows and outflows. In most cases, we're bucketing them between operational, day-to-day stuff, investing, key investments we're making in capital, mergers and acquisition, divestitures, financing activity, how we're funding the operation either through debt or through share offerings. So we're looking at different ways how money flows between activity. I picked There's no rhyme or reason why I picked Chevron, but Chevron's just a good example because they're a capital intensive industry. They have accountability to shareholders, so they have a good mix between operational cash conversions as well as looking at key capital investments required, as long as investments they're making. For example, they're looking at acquiring Hess Corporation, so they're looking at how to do proper capital allocation, and then they've got debt, dividend payouts, and all that as part of their financing. But as you can also see with this chart, and I put the sources is typically with a cash flow statement of cash flow, you'll have a bunch of tabs in Excel, or you'll build it within a business analytical tool, but they'll still have ways you feed it. And statement of cash flow is dependency on activity or changes between accounts, whether that's net income for reporting, whether that's the depreciation and amortization charges, whether that's a change in basically capital spending, debt payments. We want to look at the ebb and flows of that change. Cash forecasting now, basically you always start with a beginning balance. Then you forecast your receipts out. The idea is you're looking at daily. You can do this monthly, you can do this daily. In the case of daily, you're just looking at, you're working with your collections department and your bank statements and looking at what cash came in for that day and other receipts. You're also looking at how often you payroll, which typically is bi-weekly, weekly, or semi-monthly. You're looking at debt payments when those are due, and how often do you pay your accounts payable. Some vendors pay their accounts payables within 50 days. Some vendors get paid 15 and 30 days. So it's all about the terms of your payment schedules. And then you have other payments. And you can forecast this out, basically looking at your DSO, looking at your days to pay out, and different things per month, or as I said, per year. Or per day. You could do it weekly. It just depends on the frequency you want to do your cash forecasting. Free cash flow is really good, where it basically gives you an indication of deducting capital expenditure, especially when we're looking at operational flow, because we want to know how efficient we are with generating cash, because cash feeds into things. And a lot of cases with organization, cash is king to R&D investments, making strategic mergers, maybe divestitures. It's all about capital allocation and how you fund that from either operational cash, debt financing, or a share issuance. Here's some best management practices, right? You always want to look at efficient ways to do accounts receivable collection. And that's easier said than done. Some vendors will just pay you in net 30 or net 45 days. So you just have to look at that. You can use discounts, but you got to look at the cost of those discounts in terms of the benefit of the payments coming in. And you can also look at other areas too as well that can also expedite. You can look at drop shipments. So you're not looking at stuff coming into a warehouse. You basically deliver it. Basically, the shipment comes from a warehouse directly to a consumer or to a business. You can look at that option. You can look at anything else on the order to cash to streamline it as well. Optimizing payables, this really looks at your terms and conditions of how often you want to pay it. You want to look at discounting. Again, you'll assess the discount in terms of the cost of capital as part of it. And you want to prioritize payments and make sure you avoid late payments. Automatic payments is the big issue now with vendors. Basically, you're just going to do, you get the bank account information, you upload that as part of the payments, and you pay it like the 15th or 30th of each month. Cash flow management also relates to working capital. How do you optimize your inventory turns? How do you maximize your profitability? Because what you want to do is look at reducing your obsolescence. This is other areas too now. Most large corporations, medium to large, typically would have a treasurer. And depending on what they're doing is with debt movement, hedging, cash flow contracts, foreign currency, they're going to be heavily involved because they're mitigating potential losses on currency, on debt swapping, and all that. Smaller companies won't have as complexity to deal with the treasury functions, but it's still areas of concern. And either way, cash flow is agnostic in terms of the principles. You can build it anywhere. It just looks at the most efficient and effective way to build it. And of course, like anything else, you're going to monitor and review your processes around cash flow and just look at how best to do it and continue to improve it. Here's my contact information. You can reach out to me any given time. Here's some additional links as well. Thank you.